Let's have a quick conversation about how to slash your credit card processing fees this year. And how do you do it properly? How do you do it methodically? How do you do it smartly? Okay. So here are the facts I want you to really pay attention to. First of all, it's important to understand that when you think about credit card processing fees, basically for you, those are expenses. Those are cash outflows. Okay. So credit card processing fees can be a significant expense for small businesses, often eaten into profit margins more than expected. Okay. And so if you are a small business owner looking to maximize your profitability, finding ways to reduce these fees is really, really crucial, not only in the short run, but also in the long run. So basically, in today's conversation, I want to explain to you, I want to really explore ways you can actually slash your credit card processing fees and do so in a professional manner. Because see, the whole thing is that when you think about slashing your credit card processing fees, that just means you have to have a conversation with your merchant to make sure that they give you better prices. But you gotta go into this conversation in a very strategic way, because otherwise they will actually they will increase the fees. And the funny thing is you can't really cancel the contract. If you cancel the contract, they will charge you more. They will charge you ETFs, early termination fees, which can go from $100 all the way to $1,000. So the whole thing here is to be diplomatic. The whole thing is to think about, you have to put yourself in the processor's shoes and see how they're looking at things from their point of view, and then offer an alternative they cannot say no to. Okay, so in today's conversation, I want to provide you with actionable tips and insider strategies to help you actually minimize your credit card processing cost and improve also your bottom line. I mean, improve your bottom line in the sense that you want to reduce your cash outflows. You want to keep more money coming into your business and less money coming out. Okay, so whether you are just starting to let's say to operate, and or you just looking to optimize your existing operations, the tips I'll be sharing with you into this conversation will help you keep more of your hard-earned money, your hard-earned revenue, so you can actually have more cash to actually allocate to value-adding activities within your business. The first thing you want to do if you want to slash your credit card processing fees is to actually pick the right provider and pricing model for your business. And you want to do this right off the bat, okay? So choosing the right payment processor is kind of crucial for managing your credit card processing fees, because different providers offer various pricing models, and understanding these options can help you select the best fit for your business. So when comparing payment processors, you want to consider actually like a two main pricing models. You have Interchange Plus, and then you have fixed rate. So when you think about Interchange Plus, actually this is a model that offers transparency by breaking down the fees, showing you exactly what the card networks charge and how much your processor adds on top. This clarity allows you to see the processor's markup and ensures that you understand the true cost of each transaction. So that's really good in terms of granularity. And then you have fixed rate. So a fixed rate provides simplicity and predictability. So this is more predictable, making it easier to budget for your transaction cost. This model can be beneficial for your business if it has lower transaction volumes, or if your business prefers straightforward, consistent pricing without the need to monitor varying interchange rates. So finding the right balance really depends. So while negotiating fees is possible, significant reductions are rare, and some providers may require a contract for minimum processing volumes to keep the low rates. So if merchants don't meet this requirement, they may need to pay extra fees. Therefore, it's really important for you to choose a provider known for fair pricing and good customer support from the start. Okay, look for processors that offer clear fee structures and align with your business needs, whether you prefer the transparency of Interchange Plus or the simplicity of a fixed rate. The goal here is to find a balance between reasonable cost and reliable service. The second thing you want to do here is that you want to stay away from renting your device. You want to own it. So leasing a payment terminal might seem like the more attractive option in the short run, but in reality, it's more expensive in the long run. Purchasing your own device eliminates monthly rental fees and gives you greater flexibility. Additionally, some processors, like Moneris, which we have reviewed in another video, require a contract for their services, meaning you may be locked into renting the device for years. This can result in higher overall costs than initially expected, okay? So this is not to say that there aren't solutions where leasing might be the better option. For example, if you run a small business from home but are planning to attend a trade fair, you might need hardware to accept payments temporarily. In those cases, leasing a device for a short period of time can be more practical and cost effective. However, for most businesses, owning your terminal provides long-term financial benefits and flexibility, allowing you to avoid restrictive lease agreements and unexpected costs. If you want to slash your credit card processing fees, I want you to really save with Fee Saver. So some payment processors offer fee saver programs that allow your businesses and others to pass credit card processing fees to their customers. This means what? It means that instead of the business absorbing the cost of transaction fees, the customer pays a small percentage at the time of purchase. So that's pretty good. Now, why Fee Saver is beneficial? Well, you have lower processing costs. By transferring the transaction fees to customers, your business can significantly reduce its overall processing cost. You also have enhanced profit margins. This approach helps your business and others maintain its profit margins without having to increase product prices to cover processing fees. That's really good. Number 4, you have to remember that in-person transactions cost less, right? So whenever possible, you want to really encourage customers to pay in person. In-person transactions generally have lower fees compared to online or manually keyed in transactions. That's because from the card network, it's more risky, okay? So think about it that way. So why are in-person transactions cheaper, by the way? You have lower risk of fraud, you have advanced security features, and you have reduced processing costs. Let me explain. In-person transactions involve the physical presence of both the card and the customer, making it easier to verify the authenticity of the payment method. This physical verification reduces the risk of fraudulent activities. Payment processors view in-person transactions as less risky compared to online or manually keyed-in transactions, which are more susceptible to fraud. So lower risk typically translates to lower processing fees. So that's just very simple. You also have advanced security features. So in-person transactions make use of advanced security features like EMV chips and contactless payments, NFC, for instance. These technologies add an extra layer of security by generating unique transaction codes for each payment, making it difficult for fraudsters to clone cards or steal card information. So due to this enhanced security measures, processors often offer lower fees for in-person transactions. And you also have, finally, reduced processing costs. Online transactions require additional security measures such as tokenization, encryption, and fraud detection services, which increase the overall processing cost. So something to really keep in mind. If you want to slash your credit card processing fees, I want you to keep in mind that ACH is actually your friend, okay? Automated clearinghouse, ACH payments, are a cost-effective solution for recurring payments and other types of transactions. This system processes payments electronically through a network, bypassing traditional card networks and reducing associated fees. For example, paying your monthly utility bill through direct debit from your bank account is an ACH transaction. However, ACH can also be used to pay invoices, making it a versatile payment option. Educating your customers about ACH payments can save on transaction fees and also enhance payment efficiency. So that's really important, okay? So ACH payments are beneficial because you have lower transaction fees. They do involve transfer involves direct bank transfers, bypassing card networks and their fees, which can save you significant money on recurring transactions. ACH fees are typically lower and capped at around $6 per transaction, making it an excellent option for businesses with high volume transactions. You also have improved cash flow. So ACH payments provide predictable revenue streams since they are scheduled for specific dates, and this predictability aids in better financial management and planning. You also have reduced decline payments. So ACH transactions draw directly from bank accounts, reducing the risk of declines compared to credit card payments, which can be affected by expiration dates or credit limits. So this is important. So by utilizing ACH payments for both direct debits, and invoice payments, your business and others can lower their transaction cost, improve cash flow, and reduce the likelihood of declined transaction. You also want to review your statements if you want to slash your credit card processing fees. So regularly reviewing your statement can help you identify errors, unexpected charges, and rate increases. So if you have a business that sells both in person and online, reviewing your statement can help you discover the average rates that you need to pay for your total of revenue. Okay, if you have a concern about your high rate, you can use an online comparison tool to estimate the total fees you can save when you use a specific software tool. So you can identify errors. So you can actually spot discrepancies such as incorrect fees or misapplied charges. You can detect unexpected charges. You can stay aware of additional fees or new terms introduced by your processor. And you can monitor rate increases so you can track changes over time and also assess their impact on cost. That's important. So if you want to slash your credit card processing fees this year, I want you to encourage debit, but you cannot force customers. That's the thing. I mean, you want to encourage debit, but you have to really understand that your customers are still in charge. They're deciding to actually go their way. So it's important. Now, debit card transactions often have lower fees than credit card transactions. So while you can't really compel customers to use debit, you can inform them about the benefits, right? It's about educating your customers. It's about actually having a conversation with them, whereby your customers will, in the end, understand the real benefits here. So, what are the benefits of encouraging debit card use? You have lower processing fees, and you have reduced risk of chargebacks. So, lower processing fees. So, direct card transactions generally have lower fees because they draw funds directly from a customer's bank account, reducing really the risk for payment processors. What about reduced risk of chargebacks? Well, debit transactions have a lower risk of chargebacks because funds, when you think about it, funds are immediately deducted from the customer's account. So that's really important. Now, how do you encourage the use of debit card? It has to be a conversation. So you have to educate customers, inform them about the benefits of using debit cards, such as avoiding interest charges. And also you want to offer an incentive, right? You want to offer incentives, provide discounts or loyalty points for customers who actually pay with debit cards. It's all about encouraging customers to use a certain type of payment. Now, are they going to accept right away? No. I mean, you might actually, depending on the kind of customers you have, you might actually have to do this education over 1 month, over 3 months, over 1 year before your customers are shifting their routine, because some customers just want to pay with the credit cards because they are accumulating credit card rewards that way. But it's something that they cannot have through debit cards. That's why they're using the credit card in the first place. So if you're telling them to use another payment method, you really need to give them an incentive to actually switch. And that's how the education process can start. So if you want to slash your credit card processing fees this year, you want to minimize chargebacks. This is really important. Remember that chargebacks are actually a source of cash outflow for your business. And if you want to keep a lot of your hard-earned revenue in the business, you want to really minimize chargebacks this year. So chargebacks logically are inevitably, I mean, they are inevitably, what am I talking about? They are an unavoidable part of doing business, and they can be minimized, okay? And what I was trying to say here is that if you want to minimize them, you want to inevitably implement clearer return policies. You want to provide excellent customer service, and you want to ensure that all transactions are transparent and well documented. It's all about granularity. It's all about transparency. It's all about understanding that those chargebacks are originally inevitable for your business. That's just part of business, okay? And you want to have a software tool that offers solutions around identity theft prevention, chargeback management, fraud defender, that kind of thing, so that you can really prevent and counter chargebacks. So this is kind of cool. Okay, now why should you avoid chargebacks this year? Let's have a conversation about that. Well, there are several reasons. You have a time-consuming dispute process. You have impact on cash flow, and you have high volume risks. Let's talk about that. So when I talk about time-consuming dispute process, dealing with disputes and countering chargebacks consumes a lot of time. You would have to gather evidence, submit it, and track the resolution process, diverting attention from running the business in the first place. When I speak about impact on cash flow, when a chargeback occurs, the payment processor typically holds the disputed funds for investigation. This can negatively impact your cash flow and cause frustration as you wait for the issue to be resolved. You also have a high volume risk. This is important, especially from a scalability point of view. I mean, sudden high transaction volumes or new merchants processing large volumes from the very beginning can trigger fund holds by the processor. This is actually done to investigate the legitimacy of the transactions, leading to more frustration and potential delays in accessing your funds. Okay, so by understanding and mitigating the risks associated with chargebacks, you can focus on growing your business with fewer interruptions and financial setbacks. So, implementing strong customer service practices and maintaining transparent transaction records are key steps in reducing chargebacks and their associated challenges. If you want to slash your credit card processing fees this year, what you want to do is you want to gather actually a complete customer data online. You want to really get some intel, okay? So collecting complete customer data during online transactions can help reduce fraud and qualify for lower interchange rates. So when you gather comprehensive information such as billing address, phone number, and email, the whole thing enhances the security of the transaction. Payment processors use this data to verify the transaction's authenticity, reducing the risk of fraud. Additionally, transactions with more detailed customer data are often eligible for lower interchange rates because they are deemed less risky, right? It's one of those things where you want to get as much info as possible. And the last thing you want to do here is that if you want to slash your credit card processing fees, you want to batch process transactions. Let me explain. So, batch processing refers to closing out and submitting the day's credit card transactions to the processor. So, doing this daily can help you avoid higher fees associated with the late settlements and speed up fund deposits. Okay. So, this practice also, and that's really important, especially if you're a startup. This practice also speeds up the deposit of funds into your bank account, improving cash flow and financial management. So let me give you an example here. Imagine your business processes credit card transactions throughout the day, but only submits them once a week. This delay can lead to higher fees and slower access to funds. So by switching to a daily batch processing, your business can avoid this additional fees and receive its funds. It funds faster, enhancing its overall cash flow. So by adopting daily batch processing, you can reduce fees, ensure quicker access to your funds, and streamline your financial operations. And this simple change can have a significant positive impact on your business's bottom line. Okay, so those are the 10 tips that I want you to follow this year to reduce your credit card processing cost and actually overall boost your profitability. So you want to start implementing these strategies today to take control of your expenses and also enhance your business's financial health. So here's the bottom line here. In today's conversation, I explained to you how to slash your credit card processing fees. I give you the facts. And then finally, the bottom line. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.